We are on the floor of the New York Stock Exchange with Jim Cramer, who's going to answer your Twitter questions. Jim, let's start with Netflix, actually. Somebody asked, it's at an all-time high, but I really want to buy it. Is that a smart move?
I think that the market capitalization of Netflix does not reflect the opportunity, so I'm going to say yes. At the Cannes Film Festival, they're talking to a lot of artists about having new movies. That has been the gist of what this reason the stock's going higher, because House of Cards is apparently the most popular program in China. China is going to give them another leg of growth. Do you have to buy it now? How about buy half now and then wait for a market swoon? But Netflix, the market cap's too small.
What do you think of Yahoo after the news on the tax situation yesterday?
All right, I totally go with Rob Peck. I call him the Sun God. He's SunTrust, internet analyst. He's the guy who told you to get out of Twitter. Wish I'd listened to him for action alerts. Twitter's been hurting us, but I do think that Yahoo is a buy, and I don't expect any real tax problems.
How about LinkedIn? Is it a buy at these prices or a hold?
LinkedIn is problematic. They really didn't do a good job on the quarter. I happen to like the franchise longer term, but I have no catalyst to buy it now.
Should I be selling my Altria stock or adding to it?
No, you don't. Look, I'm not recommending any tobacco stocks, but that's now out of principle. The old days, I used to say you can take the dividend, go do something. Life's too short. I'm not recommending them. I do believe that Altria's got momentum, though.
With gas prices so low, is Exxon Mobil a value buy at this point?
No, Exxon Mobil is still the highest on a price earnings multiple. Watch Cimarex. They priced 6 million shares at 109. It's one of my favorite Permian plays, a really well-run company, symbol XEC. The stock is up after they did the deal. I still like the independents that were hurt by Einhorn, the hedge fund manager, and his attack on the frack.
Shake Shack going crazy since its IPO. Some people say it's overvalued. A lot of people, actually. Where do you see it going?
All right, Shake Shack joins Netflix, Amazon, and yes, Tesla. I call it the Tesla of the hamburger crowd. Why? Because its stores are valued about $42 million per. That's a little ridiculous. Jack in the Box valued about $1.2 million per. But this is a float problem. There's more than almost 50% of the stock is sold short. When there's a lockup expiration, those short sellers better hope that a lot of people, including Danny Meyer, who is the founder, does some selling. If not, the stock is not done. It is a momentum play that is very hard to value, but so is Amazon, so is Tesla, so is Netflix.
We're going to end on a serious question. How do you compare throwing out the first pitch to ringing the opening bell?
Ringing the opening bell is a fascination. I like the New York Stock Exchange, but not like pitch. The first pitch is just much bigger. Why? Because I'm from Philadelphia. I regard myself as so-called Philadelphia's own, and because I am convinced that my father, who passed away in November, was the reason why I got a strike. I think he helped it, because otherwise I would have bounced it in.
Jim Cramer, always
Thank
a pleasure. You. Remember, send your questions to Jim with #CramerQ on Twitter. I'm Rhonda Schaffler for The Street.